So the idea is, how do you manage all of this without it blowing everything apart? So we've seen this, is we should have had, in that recession, everything should have fallen apart. Markets went down for a month and then went up like a rocket ship because they devalued the value of money. And what are savings and investments? Future consumption. So somebody's robbed you of future consumption when you retire and you sell that house or that investment. And people don't understand why rising asset prices and the way that it's happening isn't a good thing. It's because everybody who's young is getting screwed here because everything's become more expensive to have an investment. They know they're getting screwed somewhere, they just don't know how. So the people on the left blame the people on the right, the people on the right blame the immigrants. Everybody's blaming somebody and they don't realize what's actually gone on. Interest rates are pretty much at zero in most places. They had to do something because the whole world had shut down. So given the same choice, I think all of us would have done the same thing. I know there's a bunch of people on Twitter who say the Fed, they should never cut rates. Yeah, well, try going through that and not cutting rates and seeing what it does to the global economy. It was already the worst recession in all recorded history. So no, it is what it is. And we're not talking about the dollar, like dollar versus the rand. We're talking the dollar as a currency, or even all fiat currencies, because we're seeing it because Europe's doing the same thing, Australia, the UK. So it's that fall in the purchasing power of fiat currency.
But what was bad was people didn't really understand the magnitude of the debt problems and all of this stuff. And then we got, if you remember, the European crisis a few years later, and we almost lost the euro, the European banking system. And I started to search for a solution. I thought we need to find an answer because this debt story just doesn't stop. And the financial system is broken and people don't trust it and they don't trust the media. They don't trust anybody anymore. Occupy Wall Street movements had started, the Indignados in Spain, all of these things were going on.
Basically, the financial system is kind of overcomplicated because of the regulations after 2008. So banks are very specific in what they're allowed to do with certain things, where their share price is, what their balance sheet's doing, what's happening. And so you can give them money, but they actually can't use it. And it's kind of weird. And the Fed created it to try and create buffers, but it also means that monetary policy doesn't work. In Europe, it's even worse. The banks are completely broken. And they're so hamstrung by all of this regulation, which is why they gave money directly, essentially, to the government, who gave it directly to individuals, because you need to bypass the banking system. That's what central bank digital currency is all about. It's bypassing the banking system because none of it functions.
My view is corrections in crypto are expected, and I've told everybody from day one that you need to be able to expect at least a 50% correction in the middle of a bull market. And we've had pretty close to that. Ethereum has been pretty close. Many of the alts have been larger corrections than that. So it's expected, it's normal. Within the logarithmic trend, you get these things, but they don't do a lot of damage to the chart overall because the logarithmic trend holds true. So I don't have any issue per se with the volatility. The key of crypto markets is buy and hold and don't use leverage.
So the idea is, how do you manage all of this without it blowing everything apart? So we've seen this, is we should have had, in that recession, everything should have fallen apart. Markets went down for a month and then went up like a rocket ship because they devalued the value of money. So they've kind of got this mechanism. And what they figured out also is they can do direct transfer payments to people. So the government and monetary and fiscal policy have now combined. So it's a big thing. So how do they get out of this whole mess? Well, they kind of have to keep going. They hope that they can get enough inflation over 20 years to erode it away. That's about it, really. I mean, they don't really have a choice. And also what people can't get their heads around is this rise in asset prices means that you could buy a smaller house than you could have done a year ago because the value's gone up.
I'm not a big believer that Bitcoin has a real correlation to the macro cycle in shorter term moves. And by shorter term, I mean 1 month to 6 months. I think it's related to the expansion of the central bank balance sheets and other factors. I don't think it's correlated.
if you went through the biggest economic crisis in all history with a massively levered system and it didn't fall apart, okay, what is the end game? What more do you want? Thermonuclear war? So even I was very surprised. The economy was terrible, but what it did for markets and stuff. And we need to separate economies and markets. So, yeah, I just don't think that probability is there. Because devaluing the value of the dollar and magic, assets go up. Everything's fine. And nobody gets the joke is the fact that everybody's actually getting poorer because of it, except the few who have all the assets already, which is why crypto is so interesting, right? Different markets, if it's a bond market trade, which is very low volatility, I might take leverage by using futures or options. With options, I'm defining what I can lose.
Right.
And with futures, okay, that's a bit racier. So you have to use stop losses to say, how much am I prepared to lose of my capital on this particular trade? And with leverage bets, you tend to try and not put massive bets on. Occasionally, a few times in a lifetime, the bond trade about a year and a half ago was worth putting some big leverage into and taking a lot of risk. But they only come across occasionally. People are too eager to put leverage on and take the big bet. When really, if you heard me speaking today, I'm not getting excited about anything. So why would I, if there's no big, massive thesis that you really understand the situation, you understand your risk rewards, and you're prepared to take some real risk, why bother? That's so I caution people because I see people overtrade all the time. This market price action to me feels like it's the fear of the weekend is now upon us, because we had two awful weekends, the last 2 weekends, and it was like, oh my God, what are they going to do to us? What's China going to announce overnight? Are they going to burn Bitcoiners at the stake? So that's what's going on, I think. But don't forget, the equity market's like 200 trillion. The bond market's like 250 trillion. So this is noise still. And I know everyone thinks like Bitcoin, it's going to take over the world, but it's still minuscule. It's $1 trillion and it's nothing. So people will care about it. If it does it too quickly, the governments will care about it. But if it goes up over time, they're fine with it. I mean, it's not like they care about gold. I know people say, they're conspiring to keep down the price of gold. I don't believe that at all. But they've existed alongside gold forever, and it offers the same kind of, way of getting out of the financial system. So I don't really think it's as big a deal, particularly if the financial system builds on it all. Everybody's blaming somebody, and they don't realize what's actually gone on. Basically, the financial system is kind of overcomplicated because of the regulations after 2008. I'm not a big believer that Bitcoin has a real correlation to the macro cycle in shorter term moves. This market price action to me feels like it's the fear of the weekend is now upon us.